Good morning. In this video, I want to again explain, describe, and fully show my intraday model, my intraday trading plan, my intraday strategy, or whatever you may call it. But basically, if there was a setup I would have to look for every day without looking for a daily bias, without looking for a weekly bias, it would be this. But before I do go into it, I just wanted to quickly remind ourselves where I have my eyes set on longer term for the E-mini S&P 500 and the Nasdaq. Of course, here we have, well, firstly on the trading view, I have my settlement price adjusted. This is the continuous contract, by the way, the ES exclamation mark on ES1 exclamation mark on trading view. And I also have the chart adjusted for the contract changes. You can see what happens when you don't have it adjusted. We've technically already hit the all-time high now, but when I have it adjusted for the contract changes, we'll still have these two swing highs to raid. I'm just using this for the sake of information. So right now my targets are here, and these two swing highs on the weekly chart. We can already see where we rejected from, a BC, a buy-side imbalance residing here from the 11th of December, and we had an order block on the far left of it, rejecting from these levels, the consequent encroachment and the order block signifying very bullish price action. In comparison, we would see that the Nasdaq did the same sort of, but the order block was not tagged into yet because it was a little bit lower, but we did tap into the weekly buy side imbalance, but we dipped down below almost 100% fill. We also have this buy side liquidity, which is the all-time high, and remembering where we rejected from, this massive weekly imbalance, we've fully retraced back into it now. So I'm looking to see if we can take out this swing high as the first target, and then the buy side liquidity as the main target, the all-time high on Nasdaq. And since we can clearly see that the ES is stronger than the Nasdaq, this is the reason why I trade. I've been buying the S&P 500 more than Nasdaq. So removing this arrow, what am I looking for today being CPI? Well, firstly, we have this fair value gap here in the form of a sell side imbalance, the space between this candlestick's low and this candlestick's high. Pulling it out in time, noticing here on Monday we actually closed above it. So at this point I was looking to see if price could use this area as support for higher prices. We came down all the way to this point, did not test into this the next day, but we did open up the next day and failed. The opening price was here at the perfect low of the fair value gap, making this an inversion fair value gap. So the support that I was talking about to push higher. So now going into CPI, going into today, I will be looking to see if we could get some sort of retracement, because this is today's candle, probably to that point, then the buy side. Why this point? Because of the high of this now potential order block. The high of that level could make us immediately rebalance, because that would be an immediate rebalance if we actually test this level, which I'm going to set an alert for. So if we test this level, it would be an immediate rebalance, then a push to the upside. Looking on lower time frames, let's jump down to the 4 hour. we may not even come down to this level. We may just retrace into this 4-hour fair value gap. So I have two possible entries, this 4-hour fair value gap or this line that I drew out, but I'm favoring this line more than this fair value gap because of the fact that we have an inversion on this side. We have this massive fair value gap there, pulled out in time. Notice that the immediate rebalance is just below the consequent encroachment of this inversion. So we have these two possibilities. We have that inversion and we have this one. So I guess I'm just going to wait and see which one it chooses, but I'm looking at this one more now and I'm seeing it almost perfectly aligning with this fair value gap here. So we might just tap into this and then push up. So I'll set another alert at this point, but I'll wait for a lower time frame confirmation, a 1 minute or sub 1 minute market structure shift, which actually goes into what I'm going to be teaching for today. So that being said, all this being said, we're now going to jump into my intraday model. So every day I have my sessions outlined. I would have written them down, but I think it's best I just show it as I do it. So let's do that instead. So I decided to write it out for those that want to take a screenshot or those that want to write it on their notes. But these are the times that I pay attention to the most, and you'll see why in a second. So we have the midnight to 8 a.m. That's basically the London session. So I'm using the replay function on TradingView, so we can go back to yesterday's price action. So at this point, it was looking down here. This shows the time. At this point, it was 11:15 p.m. Moving one step forward, we have 11:30. Another step, another step. We finally have midnight. So I draw out my vertical line. I'm using the vertical line tool on TradingView. I draw out my vertical line. But notice here at the bottom, we have 7 p.m. to midnight. So which means there is another time frame between 7 p.m. and midnight. 7 p.m. is residing over there, right? Some might be asking, those that maybe don't know ICT's concepts, these are actually just the kill zones for different sessions. I mean, actually, not mean also kill zones. These are just the sessions. So this last one, 7 p.m. to midnight, New York local time, by the way. Looking down here, it's UTC 5, New York local time. So these are New York local time. So 7 p.m. to midnight is the Asia session. Now, next question some people may ask is, okay, what then? What do you do now that you know the Asia session? Next thing I do is I outline the high of the session. That is the highest point between this space, and this is the lowest point between that same space. So in other words, this is my Asia session high and this is my Asia session low. The highest point of the Asia session, the lowest point of the Asia session. I typically just call it Tokyo session, which is why if you check my charts, you are likely to just see it written Tokyo high, Tokyo low. So let's do that now. So we have the Asia session high and Asia session low. Okay, what do I do with that information? I watch to see what liquidity is swept. So let's add that in our notes. Wait for liquidity to be swept. So that's the first step. Wait for liquidity to be swept, which is the high or the low to be taken. Right? So let's move on a little bit more. So price is still printing, keeping in mind this is the high and this is the low. We're still looking to see which liquidity would be swept first, and there we go. At that point, we just saw the Asia session low getting swept. So drawing out the line out, we can see the Tokyo low was swept first. So at this point, this is when I now go down to my 5 minutes chart, because I take my trades on the 5 minutes time frame. On the 5 minutes time frame, I wait for a displacement that creates a 5 minutes fair value gap. So in this case, we are essentially looking for a displacement. Is just an impulsive move to one direction. So a quick move to one direction. For example, looking at this portion, we can see there was a quick move to the sell side for us to sweep Asia session low. This quick move was so fast that we actually created a fair value gap, which is the gap that you see between this candlestick's low and this candlestick's high. Notice right there, there's a fair value gap. This fair value gap, since it was created falling off, is called a CB, or a sell side imbalance, buy side inefficiency. So that's a CB. Notice that sometimes I'll be marking out my fair value gaps as a BC or a CB. In this case, it's a CB. It's supposed to, price is supposed to retrace up into it and reject lower, right? That's a CB. And then BC works obviously the opposite way, like this fair value gap here, for example, from here to there, that is a BC. So when price came down into it at this point, was supposed to reject and push higher, but you can see in these two instances they failed. That's what makes them an inversion fair value gap. So when it fails, when we close above it or close below it, it becomes an inversion fair value gap. Anyway, so going on to what I was saying, I wait for a displacement to the opposite direction. So we swept the sell side, we swept the lows, we are waiting for a push to the upside that creates a BC, a buy side imbalance, a bullish fair value gap, whatever you want to call it. And let's see if we'll get it. Price is still printing, and there we go. Right there, we just got it. Noticing that it's a tiny one. There are two actually that we created now. Noticing there we have a tiny fair value gap. We also have this one over there and over there. So we have this BC and we have that BC. When we've gotten that displacement, actually before this I should have noted that we should be waiting for a market structure shift as well. Market structure shift, and with mine specifically I wait for a closure above or below a swing high or low. A market structure shift is basically when we've shifted from sells to buys. In this case, we've shifted from sells to buys only when we get a closure above or below a swing high or low. In this case, we can easily see there's a swing high here, but the more obvious one is this one up here, right? So we have this swing high. A swing high is basically a high with two lower lows to the left and right of it. So this candle right here created a high, look to the left, there's a low, look to the left, there's a low, right? So this is a swing high. That's when you notice me drawing out a line like so and labeling it as a market structure shift. And looking to the left, we can see that at this point, this candle, we had not closed above this high yet. But here, right here at 2:40 a.m. New York local time, we closed above this swing high. This is now a valid market structure shift to me. At this point is the time I start waiting for a retracement into one of these 5-minute fair value gaps. So I might set an order, for example, okay, I might just set an order like so in one of them in this fair value gap, my stop loss being at the swing low or Tokyo low, which is the low that was swept, the liquidity that was taken. There's no reason for us to come back again and take a new liquidity, so we can just put the stop loss at where the liquidity was taken. And then the target is 5 handles on the S&P 500, and if I get 5 handles, I'm done. I close the trade. If not, if I see the possibility of us, I mean if I see the possibility of price running a little bit more, then I'll aim for the previous session high. In this case, I'll be aiming for Asia session high, right? So this will be my target, my entry, my stop loss. So let's see how price plays out. Okay, at that point we've been triggered in. So let's say you were using this fair value gap, you would have been triggered in. If you're using this one, you would have been triggered in. If you wanted to pyramid as well, you would have added both. You would have been in on both of them. And then let price play out. Still printing, it's meandering, and there we go. So at that point, our targets were hit at 4 a.m. So this, in a nutshell, is my target. I mean, this in a nutshell is my model, not my target. Target. The previous session high or previous session low. So this is essentially my model in a nutshell. I wait for a liquidity to be swept, and liquidity is obviously the session highs or the session lows, and then I wait for a market structure shift on my 5 minutes chart. I should be more specific there. A 5 minutes market structure shift, which is a closure below or above a swing high or low, right? The case, it's also the case with the opposite direction, which I will show in a second. But for now, we have this checklist to go through. Then wait for displacement to the opposite direction, 5 minutes fair value gap. In this case, we had 2 of them, and I would have taken both. To be honest, if it was me, I would have taken both of them, with my stop loss being at the Tokyo low. And you can see it's not even a 1-to-1, but it's a back-tested model, and I know that it works out 80% of the time. But there's another expansion to it that I'll have to add later. Then I'll target the previous session high or the previous session low. So when I say there's another expansion that I have to add, I mean, I don't trade the Asia session firstly. I only trade the New York session when it comes to the E-mini S&P 500, because I found that there's a higher win rate during those sessions, because that's when the equity market is open as well, and it makes more sense why it will be more active at that point. So let's just quickly fix that. So now let's move on to the actual Asia session. I only wanted to the actual New York session. I only wanted to show you an example of my model, an explanation of it at this point, and yeah. But let's just see how it is in a real life scenario. So we have the Asia session, which is 7 p.m. to midnight. The next session is midnight to 8 a.m. So technically this is the time I wake up from midnight, and I wait until 8. I don't stare at my chart the whole time. I just kind of wait for it, and I like plotting out my lines on the 15 minutes because it's easier. So between midnight and 8, I'm waiting for the chart to print out the data that we need to work with, and there, it's done. So we have the data for London session now. So as always, we find out the highest point during London session, plot it out in time, and let's label that appropriately. And then we have the lowest point during the London session, which is over there. So obviously, now that we have the liquidity, you know what the next rule is going to be, which is to wait for the liquidity to be swept. So at this point, I would have drawn out my lines just for the sake of habit, and I like certain alerts to tell me when one of the liquidity has been swept on TradingView. So I would click on my line tool, click on the alerts there, but yeah, of course it's not possible in replay mode, and then yeah, I just click on OK, so I can see when the high or the low has been taken. But let's just see which one will be swept first. Okay, I think that was a bit too fast. Let's go back there and rewatch that. Okay, there. So we see the London session high has been taken. Something interesting actually happened in this trade, but normally this is when I would go down to the 5 minutes chart. As we know, let's just pull our set of rules close to us. We have seen liquidity taken during London, which is the high. I mean during New York, which is the London high, and now we wait for the 5 minutes market structure shifts. So let's see how data prints. Notice that we have created a swing low here. So right now, in my head, in my mind, I'll be waiting to see if we can get a closure below this swing low, right? Based on the rules. We also have another swing low right there. I know it's not as visible as this one, which is why I'll prefer just using this one. But yeah, let's just remove ambiguity and stick and use the obvious swing low here. So if we get a closure below the swing low, when we come back to any fair value gap here, we should be selling to take out the previous session low, which is the London session now, right? So that's the game plan. Let's see how it plays out. We can see we're trading back again to that London high. We are displacing yet again. We have another swing low we can work with at that point, and price just kind of meanders around. So there. In this scenario, we essentially have a no trade day, because by 12 o'clock it's already lunchtime. By 12 o'clock I kill all my trading. I don't trade at all. And yeah, that's my plan for the day. The only reason I gave all these times is for those that actually want to trade this model with every single session that they have. For example, you can trade the New York PM session by looking at the New York AM session, which is 8 to 1, right? So this day there will be a no trade day, but there's something I need to cover soon. I mean after this. So let's see if we can get a trade plan for 1 to 7 p.m. Let's actually draw out 1 to 7 p.m. So here is our 1 o'clock, and our 7 p.m. is basically closure, which is all the way there. So let's put back our London high and London lows where they should be. So here we have our New York AM high, and we have our New York AM low. Let's label that appropriately after applying the style to it. So this is New York AM, New York PM low. So yeah, we did not get a trade during the New York AM session, which is when I advise all your trading should be done between this time frame. By 12, actually, not by 1, by 12 your trading should be done for the day. I would have closed. If I was in profit, if I was in a loss, I was probably going to just kill it. And in this case, we had a no trade day because we didn't get a market structure shift. We didn't get a closure below a swing low. And you can see if you had rushed in to enter any sell side imbalance that you saw, you would have been wrecked because your stop loss would be hit at the swing high at that point. So yeah, always wait for the market structure shift for higher probability. And yeah, let's assume now you want to trade the PM session. Let's see how price prints during this last chance that you have for the day. Let's play and speed it up a bit. Okay, so we don't even need to speed it up. We already got a sweep in the AM high. Actually, this AM high is not accurate. I'm using this high because it's an obvious high, but technically between this time and this time, the highest point is technically there. If you notice, we have this candle right here being higher than this one, but I'm just using this one for simplicity's sake. But yeah, it's the same thing. Even if you use this one, you can see which liquidity was taken first, the high or the low, the buy side or the sell side. Obviously the buy side was taken first. Next thing, we wait for a displacement and make a market structure shift to occur, and so we're waiting for a closure below a swing low. For example, this low right here. If we can get price closing below this, we can take a sell with a CB. But of course, you can see we keep trading higher and higher and higher. And at this point, to be honest, I would have killed the trade. I mean, I would have killed the chances of even taking any trade, unless you are really keen. If you were really keen to taking a trade this session, you would have gotten one. You would have gotten the market structure shift at that point. If you notice, we have a swing low. We finally got the displacement we wanted, but at this point it was like 3:20 p.m. So, but we did get the market structure shift there, and we also got the market structure shift there because we got a closure below a swing low. That's a swing low. We got a closure below it, and then we got a displacement to the opposite direction because remember, buy side was swept here. It was swept even more. And now we got the displacement down. That's the opposite direction. So got a displacement in the opposite direction that creates a 5 minutes fair value gap. So we got a 5 minutes CB residing right there. Your stop loss at the swing high, and your target is typically the previous session low. So in this case, we're targeting this sell side, right? Previous session low. And let's see how that pans out. And I think it's gonna bring us to current price, or it eventually hits the stop loss. Yeah, right there, hit the stop loss at that point, even here again. So we're done. This is why I don't trade the New York PM session. This is why I also don't trade the Asia session. You wouldn't find me playing in this session. I only trade the New York AM session when it comes to the S&P 500, because that's when the markets open as well. Of course, you saw that we also got a very beautiful trade during the London session, but for ES for E-mini S&P 500, I prefer trading this, the New York AM session. This is all I trade. This is all I do. My model, my bread and butter trade for every day, no matter what. This is all there is. But let's say you were a person that was targeting strictly 5 handles. Would you have gotten it when you got tagged into this trade? I believe so, because from this point to that low, it was 13 handles. So it actually moved 10 handles. And if you strictly took your 5 handle profit, you would have been out in profit with this trade idea. I just wouldn't favor this because I prefer targeting a previous session high or low. Of course, if it's a low probability condition, then yes, I'm going to take my 5 handles and run with it. So yeah, this is all I trade. But there's something I wanted to show at this point. No, I'm clicking on the wrong things now. Something I wanted to show at this point. Reducing the speed back down to 1. Remember when we took the London session high and we didn't get a proper market structure shift like we wanted? I was actually trading this on the 30 seconds chart. So because of the fractal nature of price and time, I was able to capitalize a little bit on this move. Because on the 30 seconds chart, yes, we also got the liquidity sweep. I don't have to keep showing you the London session, high or low, but we got something very interesting here. But of course, this is a little more advanced. This has nothing to do with the model that I will trade every day. This is more what would be my alternative. I'll be trading on the 30 seconds or 15 seconds charts. So we got this. Inside of the 15 minutes, inside of the 30 minutes chart, we also got a sweep in liquidity right there. A turtle soup, if you would. And I'm noting this specific candle. I'm noting how strong, how beefy it is. It's basically an order block. And when price comes down to this, I'm expecting this order block to support higher prices, right? I'm expecting price to bounce here and push higher. But looking at what price does next, we closed below this so-called order block. So at this point now, my order block has now changed to become a breaker, a bearish breaker. I'm expecting price to fall off from here. So I had a sell entry like so with my stop loss at the swing high, and my take profit was inside of these imbalances. This is why I say this is a lot more advanced than my actual day-to-day model. So let's say we're targeting a risk reward of 1 to 2. Let's say we're risking $100 for $200, and I decided to play this out. So keep in mind I'm still in the entry, the breaker entry, and boom, just like that. So this is a 30 seconds chart. So this trade literally took me about 5 minutes to hit my target. And I remember how excited I was, and I was waiting to see if we would get the 5 minutes confirmation, my day-to-day, the model that I trade every day, you know. And of course you saw already that we did not get that, because skipping to the 5 minutes and letting things play out, we didn't get the market structure shift. But yeah, it shows how I'm still able to capitalize on the same model, which is the 2022 model, but using specific sessions, and occasionally allowing myself to trade only during the silver bullet hour, which is a whole different topic that we can talk about another day for those interested. So that's all I have for now. I don't necessarily have anything else to add. For those that are interested in seeing the trades that the trade I took there, actually let's go back to the 15 seconds charts. Let's enable my executions. Okay, I'm not sure why it's not showing. I think it's straight away doing its thing again. But yeah, no, it normally would have shown my execution, but I took the trade there and I closed off there because I was aiming for a 2-to-1 risk reward. I would have gotten it if I also aimed for a 3-to-1 risk reward. I would have gotten it also. But yeah, anyway, that's all for now. I don't believe I have anything else to add. I just wanted to show my day-to-day model. I already have the set of rules written out here for you all to digest, to write in your notes. I've already pointed out where my target is going into the rest of the week. And yeah, stay safe, good luck, and good trading.